Hello. Today, I'd like to talk about how foreign stocks are treated for Japanese tax purposes, especially when it comes to capital gains and losses. I hope this explanation will be helpful to you. When you sell foreign listed stocks and make a loss, you can offset that loss with gains from other listed stocks in the same year. However, if you trade through an overseas securities company, there are some important restrictions. For example, you cannot offset those losses against dividend income from listed stocks, nor can you carry forward the losses to future years. So, in this explanation, I will focus on how capital gains and losses from foreign stocks are handled under Japanese tax rules. I'll also cover how to convert amounts into Japanese yen and how loss offsets work. First, let's talk about domestic stock sales and the basic rules. When you sell Japanese stocks, you need to classify them as either listed stocks or non-listed stocks. Listed stocks are those traded on a stock exchange, while non-listed stocks are not. For both categories, you can offset gains and losses within the same category during the same year. After offsetting, the taxable amount is subject to a flat tax rate of 23.15%, but it's important to know that you cannot offset between these two categories. In other words, gains from listed stocks can be offset with losses from other listed stocks, but not with losses from non-listed stocks. Another key point is that for listed stocks, you can also offset losses with dividend income from listed stocks if you choose separate self-assessment taxation. And if you still have remaining losses, you can carry them forward for up to 3 years. However, this is not allowed for non-listed stocks. Next, let's look at how foreign stocks are classified. Just like domestic stocks, foreign stocks are classified as either listed or non-listed. Listed stocks include those traded on any stock exchange, whether in Japan or overseas. So if you own foreign stocks listed on an overseas exchange, they are treated as listed stocks for tax purposes. For example, if you trade through a Japanese securities company, you can offset capital gains and losses from domestic listed stocks with those from foreign listed stocks as long as they fall within the same listed stock category. Now, how do you calculate capital gains and losses for foreign stocks? After classification, you use a basic formula, selling price minus the sum of purchase cost and selling expenses equals capital gain or loss. For foreign stocks, you also need to convert the amounts into Japanese yen using the exchange rates published by securities companies. Finally, let's discuss how losses from foreign listed stocks are treated. Losses from foreign listed stocks can be offset within gains from other listed stocks in the same year, similar to domestic stocks. However, if these losses result in overall loss in the listed stocks category, that loss is ignored for certain purposes. Specifically, you cannot offset it with dividend income from listed stocks, and you cannot carry it forward to future years. Remember, offsetting with dividend income and carrying forward losses for up to 3 years is only allowed when the transactions are made through a Japanese registered securities company. So if you trade through an overseas broker, these benefits are not available. When you trade through a Japanese securities company, you can offset losses with dividend income from both domestic and foreign listed stocks and carry the loss forward to future years. That's all for today's explanation. I hope this was helpful for you to understand the tax treatment of foreign stocks in Japan. Thank you for listening.